Subscribe to our channel, press the bell icon and never miss an update from Latestly.
Oil prices had reached near 2-decade lows due to a demand shock as the world's biggest oil-consuming economies went into a sudden lockdown to contain the spread of coronavirus. The fuel consumption was expected to fall globally by 27 million barrels per day in April and 20 million barrels per day in May. This fall in demand was compounded by major oil producers, Saudi Arabia and Russia, engaging in a price war and ramping up their oil output in a bid to hold on to market share. The oil market was quite literally drowning due to a supply glut as producers continue to pump out crude at record levels, but consumption saw a sudden and sharp decline with major oil-consuming countries like India, China and EU countries going into a lockdown. Brent crude at one point on March 30 was at $19 per barrel. Crude oil of heavier quality, which needs more purification and processing like the Wyoming asphalt SAR, actually saw negative pricing. What this means is that the supplier would pay the buyer to take oil off their hands because it is more costly to shut off oil production. Major producers too were faced with the looming reality of a lack of space to store the pumped out crude. Talks had begun about storing oil in ships that were used for the transport of crude. Faced with such a perfect storm, top oil-producing nations hammered out a deal over the weekend, with countries agreeing to a historic production cut to prop up oil prices. OPEC producers, dominated by Saudi Arabia and Russia, thrashed out a compromise deal via video conference on Sunday, April 12th. In the compromise reached Sunday, they agreed to cut off 9.7 million barrels per day from May, according to Mexican Energy Minister Rocío Nale. This production cut accounts for 1/5 of the total output production made by Saudi Arabia and Russia. The deal hopes to contain oil prices at its current low levels with deep production cuts in May and June. This will be followed by a gradual reduction in cuts until April 2022. US President Donald Trump welcomed a great deal for all, saying on Twitter it would save hundreds of thousands of energy jobs in the United States.